Siemens Energy is currently booking for 2029. So, we're looking, they're fully booked up, and they've just recently announced that they're looking to expand their production capacity, which will take some time to do.
The opportunity is definitely huge, as Omid outlined, and the market for gas turbines is going from 60 gigawatts a few years ago, and there's a 100 gigawatt figure sort of circling around in the market, which is going to be towards the end of this decade.
When I think about the power sector in general in the United States, we had approaching 25 years ago, we had a big boom in CCGT build out in the States. And I think a lot of the players who purchased those and installed them got a little bit burned.
That's exactly why GE has been non-committal to more units beyond 2028.
The way I like to think about the wind turbine business is they're loss leaders. So the same way on Black Friday, I got a PlayStation for very cheap, but the games are expensive. Wind turbines are relatively cheap and they make their money on the servicing side.
I want to share three stats here with you that's relevant to answer this question. In 2025, global electricity demand grew twice as fast as total energy demand. Right? That's quite exceptional year. And worldwide, we had 1.3 trillion euros that was invested in power generation and grid this year alone. And looking ahead, many forecasters like IEA are pointing to a 45% increase in global electricity demand by 2035. And more specifically for Siemens Energy, there's a number of investment programs that align directly with its businesses that are also causing this capacity constraint. On the energy security front, annual gas capacity additions until 2035 could see a 50% increase.
When we look at 2026, I think there's three key points that we want to focus on. So there is resilient global demand. A lot of that is onshore. You've got margin expansion. And then the last one is offshore execution risks.
If you look at the battery storage numbers coming out of California and Texas, I mean, it's an emergent trend. If I were to sort of identify one of the things that's just going to continue to really have an impact on power markets in 2026, 2027, it seems like the day of battery storage has arrived. Good morning, good afternoon, everyone. This is Rob Barnett, and I would like to welcome you to today's BI Energy Exchange, where we talk about our research and the latest developments in energy markets. For the call today, we've got a few special guests, some folks who have joined us in the past, but don't come on as regularly as some of the folks from the core energy team. We have Omid Vaziri joining us from London. He is one of our senior industrials analysts covering Siemens Energy and numerous other names in the space. Sitting near Omid, we have Mustafa Okur joining. He covers GE Vernova as well as numerous other industrial names. And we also are joined by a somewhat regular on this call, Alessia Mastrandria, also sitting in London. So I'm the only non-UK representative here today, but this crew I think is going to be a really fun one to chat about some interesting dynamics in the energy market and how some of these big industrial names play into it. One of the things that I think we've touched upon on this call over the last 12, 18 months is the tremendous power needs of the whole AI data center build out that's occurring in the US and other countries. And there's a big scramble to get gas turbines. And, my general impression is that if you go to a GE Vernova or a Siemens, that they're very happy to sell you a gas turbine, but that you're going to get in line, and you're probably not going to get delivery for a few years. So let's come to you first, Omid. I know you were just at the Capital Markets Day for Siemens Energy. I want you to frame the landscape, but maybe let's start with that first question. How quickly could I get a gas turbine right now if I'm highly motivated?
Hi, everybody else. Yeah, thanks very much for the invitation. It's good to be part of this discussion, and yeah, back with the energy team. Thanks for this invitation. Siemens Energy is currently booking for 2029. So, we're looking, they're fully booked up, and they've just recently announced that they're looking to expand their production capacity, which will take some time to do. And they've given us some numbers around that. So, there's a long wait for these things, and demand is outstripping supply. And maybe just to very quickly give some a quick market context here. I mean, these companies are operating in an amazing market right now. To put it in context, and I want to share three stats here with you that's relevant to answer this question. In 2025, global electricity demand grew twice as fast as total energy demand. Right, that's quite exceptional. Yeah. And worldwide, we had 1.3 trillion euros that was invested in power generation and grid this year alone. And looking ahead, many forecasters like IEA are pointing to a 45% increase in global electricity demand by 2035. And more specifically for Siemens Energy, there's a number of investment programs that align directly with its businesses that are also causing this, capacity constraint. On the energy security front, annual gas capacity additions until 2035 could see a 50% increase. That's from already quite strong levels. On the grid side, global transmission networks could double by 2035, and 80% of installed transformer capacity in advanced economies is estimated to reach age limits by then. But I guess we'll come to the grid discussions a bit later. But I guess this market background is quite relevant for a discussion on Siemens Energy and Siemens and GE Vernova. So it's not surprising that the midterm financial targets for these companies are being raised. We had Siemens Energy raise its targets 2 weeks ago. It's done that a number of times now, and each time running ahead of consensus estimates.
Thank you so much for that very great overview there, Omid. And I'm struck by the high level figure. I think in dollars rather than in euros, but north of $1 trillion being spent on power infrastructure globally. And I think it's kind of interesting because I think in the hyperscaler space, we're talking about $1 trillion, couple trillion getting spent on data centers, just data centers over the next few years. So, I guess power is the OG of capital intensive industries. But Mustafa, let's get your framing as well. What do you make of the sprint to add all of these gas turbines to the grid? And do you see it at the same way as Omid? How big is the opportunity in your mind?
Sure, the opportunity is definitely huge, as Omid outlined, and the market for gas turbines is going from 60 gigawatts a few years ago, and there's 100 gigawatt figure sort of circling around in the market, which is going to be towards the end of this decade, so 2030, and that's sort of bringing the question to the likes of GE and Siemens Energy: are you going to raise capacity further beyond sort of the midterm 2028 targets? And that's sort of the key question in the industry for us. Siemens is trying to get more units, as Omid mentioned. They've raised their targets, and GE has their event next week. So we're trying to see what will happen there. But in terms of the market, just to give it a little bit more background, so the chart on the top left shows you sort of the gas additions, but there's a bit of a sort of a divergence between the market makeup. You have the 60 hertz grid markets in orange in that world map, and the 50 hertz markets in blue. And a lot of the action is happening in the US and in the Middle East, in countries like Saudi Arabia. A lot of the additions will come there. And that's where sort of GE used to be the core leader. It's their home market in the US. So we're trying to see whether they will match the expectations for higher units. So far, management has been very committal to price and not really committal to more capacity. But after Siemens' event last week, we published a note this morning saying maybe there is some room for more capacity because as you sort of rightly asked in the very beginning, there's a 4 or 5 year wait now for these turbines.
Maybe to noodle a little bit on this idea that the total market's going to expand. So kind of when I think about the power sector in general in the United States, we had approaching 25 years ago, we had a big boom in CCGT build out in the States. And I think a lot of the players who purchased those and installed them got a little bit burned. I feel like that's a fair characterization of history. Maybe the idea was that you were going to build all these gas turbines, get them installed. They were going to displace coal, and the utilization rates on the turbines once they were in the ground just didn't live up to expectations. So maybe some of the management teams still have some of that memory in mind. So how concerned is a GE, Vernova, or a Siemens, I guess, that they build out the capacity to build more turbines and then that the orders dry up in the 2030s? How are they reconciling with that risk? That's for you, Mustafa.
That's exactly why GE has been non-committal to more units beyond 2028. But we ran some scenarios in August, and we saw that the gas power business EBITDA could exceed consensus by about 5-6%. It's the next slide, Rob. But essentially, or the one after, apologies. There we go. So essentially, if you look at the small bar chart in the middle, we have two sort of bullish cases in there, a high case and a base case with stronger pricing. There, we're sort of assuming that they will go up to 80 or 85 units in 2028 and stop there. And that got us to about $5.9 billion of EBITDA. The problem is today, consensus is above 6 billion. So to move the stock, I think they either have to come out with much larger price raises next week or maybe commit to something like 100 units by 2030. So it has to be one of those two things. But as you said,
very interesting. Omid, I want to get your same perspective. Just how is Siemens reconciling this risk of, hey, we know there's a lot of demand right now. Are they confident that the demand is enduring?
They're fairly confident. They're quite openly acknowledge that beyond 2030 they don't have too much visibility. They also remind us that a lot of the demand is actually from traditional sources, and data center is a fast-growing portion of it, but it's not the biggest portion. So if you look at the latest order intakes, data centers was just under a quarter of the order intake. Sort of conventional means by far over 50%. And then you also have, peaking applications, PowerShip, as well as, the offshore FPSOs, also requiring, these frames. Also part of the demand mix. And so the way Siemens Energy is approaching is instead of adding new factories, they're largely going after debottlenecking and optimizing current sites. They're also looking to make great use of AI tools in driving productivity and really also investing quite a bit on broadening, expanding their supply sources basis, the local approach, in order to meet, in order to also be able to expand that capacity. So a lot of it is somewhat organic around the existing sites and focused on debottlenecking rather than adding new factories. But you have to put this in the context of the current backlog, which is extremely strong. For Siemens Energy is 138 billion euros. And so, the plans that the company's put forward 2 weeks ago at its Capital Markets Day is to grow its annual gas capacity additions to above 30 gigawatts per annum, through 28 to 2030. And that's up from a planned 22 gigawatts over 25 to 27. And in unit terms, what we're talking about is 160 units over 20 capacity over 25 to 27, ramping up to 210 to 230 units by 28 to 30. And that's really because capacity is sold out until full year 28, and they're really booking for late 28 and 29. So they are treading carefully. They are trying to do it in an efficient, optimized manner, in a way that gives them flexibility to adjust should the market, that demand not continue to sort of grow in the same way that it has done recently or expected to develop.
Follow up for you, Omid. One of the things I've seen, and I haven't looked at the details closely, but my general sense is that at least in the U.S., companies seem to be willing to pay a premium to get gas turbines right now. And off the top of my head, I want to say I think we've seen some projects acquiring like around $2,000 a kilowatt versus maybe $1,000 per kW just a couple of years ago. So is a company like Siemens realizing that pricing premium? Is that middleman? Is that inflated pricing going to be sustained for a few years? How do you think about what the price is to the consumer on this equipment?
Yes, they are. They are able to to price favorably. The trends are very positive on that front. And we think it could sustain, for some time, given, if the market expectations are right, and given the size of the backlog and the supply-demand setup, which currently, favors sort of the supply side being the bottleneck. And so we think the pricing can remain favorable, and the likes of Siemens Energy, GE Vernova, and the Asian peer, they are taking advantage of this market opportunity. But there's other margin levers in productivity, and also the accretive mix in the backlog. And one way that we do know, other than commentary from management, obviously they don't put a exact price on the pricing, or they don't actually quantify the pricing advancements very precisely because of commercial sensitivity or the nature of it. But they do tell us that the backlog margin for these for the gas service business is growing very nicely. Since 2022, the new equipment related backlog margin is up 10 to 12 percentage points. Is the current backlog, the latest order intake suggests. So that's quite exceptional. And on the service side is 2 to 3 percentage points. So that gives you an idea of just how much the pricing is also contributing to that development.
Mustafa, I want to get your perspective on this. Well, you did a EBITDA scenario for GE Vernova you were just talking about. How much of a pricing story feeds into that, and could they potentially lift above consensus if they can command more premium pricing for a longer duration?
Sure. So for our high price scenario, we baked in a 7 percentage point price gain per year from 2025 to 2028. So 10 to 12 from Siemens that's a positive read across for sure in the backlog. But when we did that study back in August, EBITDA was around 5.6 billion. Now the consensus, now consensus is over 6. So it seems like the expectations for a price hike are already sort of baked into the market estimates. But one thing, if I could show slide 2, Rob, is there is a difference in terms of the portfolio of these two companies. GE essentially focuses on either the very large turbines. So if you saw yes, this is the one. So if you look at sort of the 2024 orders or the 25 orders, the blue bars are GE, the orange bars are Siemens Energy. You can see the order intake of the heavy units, the H class and the F class, uh, is just much higher for GE. And they focus on sort of the very large turbines and the small aeroderivative turbines. Siemens has a much broader portfolio of offerings. They do a lot of medium size, for example. But across the entire portfolio, including the aeroderivatives, we're seeing stronger pricing. So that does hold for everyone. The point I wanted to make here, though, is it is a little bit more difficult for GE to raise capacity because they primarily focus on the heavies, and there's a much higher risk attached to that, right? So if you go from 80 heavy units to 100 heavy units, if you don't get the orders, you've made a huge capital commitment there for those units. And they have been burned in the past. They reported a negative EBITDA not too long ago in the gas power business. So that's one point to highlight between the two. But pricing has been very, very strong. It's well above 2000 for a complete heavy duty combined cycle gas plant. And GE's share from that is around a third for their equipment. That's the way to think about it.
Okay, thank you.
I also want to add, if I may, the service opportunity of this additional installed base in the outer years is really interesting. And I feel like there's a lot of focus today on, the new gas turbines and how, the margin in the backlog is evolving, which is important. It's part of the turnaround story of Siemens Energy, and it's important that they execute well. But I think there is in the outer years quite an exciting opportunity from this growing installed base, which, following a number of decades of low additions, has come back now, and it has done in a great way. And Siemens Energy gave us a figure of 30 billion euros revenue potential from service lifecycle over 20 years. Following the what is expects the 78 gigawatt backlog new equipment installations. And in total, it expects to install 180 gigawatts, by the way, all the way out to 2030, but it already has 78 gigawatts of this in the backlog. So that is, quite an exciting, and that is really, the profit driver for the gas service segment of the business.
Thank you for that color there, Omid. And for folks listening, I see you've got a few of you have asked questions. We will try to circle around and come back to that. But before we do that, I want to get Alessio into the conversation. And, we've been talking gas turbines, but both GE Vernova and Siemens Energy also have appreciably large energy transition, specifically wind businesses. And Alessio, if you could just frame a couple things, generally give us a sense, how's the wind market shaping up as we head into 2026? Are we seeing just broadly the kind of multi-year backlogs that we're seeing on gas turbines in wind? And also, we're seeing this premium pricing occurring for gas turbines. What about wind? Generally, I think of wind costs as coming down through time, though we have seen a little bit of uplift in recent years, but kind of gives a sense of the wind sort of installation outlook, the backlog pace, and what's going on with pricing there.
Sure. Thanks, Rob. I think so. When we look at 2026, I think there's three key points that we want to focus on. So there is resilient global demand. A lot of that is onshore. You've got margin expansion, and then the last one is offshore execution risks. So when you think of global demand looking out to 2028, we're going to see about 140 gigawatts installed throughout the world every year till the end of the decade. And that's not all just in China. Europe did about 15 gigawatts last year. That's going to probably increase to about 30 gigawatts as the decade progresses annually. The US might slow down just a tiny bit. Despite the political headlines and Trump's stances on wind, Vestas is still holding firm. They recently did a 500 megawatt order in the US, and they're keeping their blade factory open so that they still see the US being a viable market for them. As far as margin expansion goes, both Vestas and Nordex are on pace for their midterm plans. Vestas sees EBIT margin of 10%. They're slowly getting towards that, and they might even do that ahead of schedule. Nordex, a little bit more tempered, but still very impressive. They're targeting an 8% EBITDA margin, and they're almost there, 1 or 2 years ahead of schedule there. As far as offshore goes, I'll use Vestas as an example. Last year, they had roughly 4.5 gigawatts of offshore orders. This year, they might do half of that. But we are going to see an uplift on offshore orders or orders in general from Vestas. They usually have a very strong December. They did about 5 gigawatts in December last year, 15 the whole year. So we're 3 days into December. They've already done half a gigawatt. I expect that to be much, much higher. And then you asked me about pricing, right?
Yes, please.
So back in 2020, 2022, we saw steel prices spike up massively, 50% increase. And as a result, these turbine manufacturers said, okay, we're going to pass this cost on to customers. And, while we did see decades of the price coming down for wind turbines, they've shot up and they've hovered pretty stably at $1 per megawatt. And that number hasn't really budged, even though steel prices are down from those peaks.
Yeah, maybe one follow-up for you, Alessio, is just Omid was mentioning the service business on the gas side, and I think that's a big component of the wind OEMs as well. Give us a sense of what they make on service versus actually selling the turbines.
Yeah, I mean, the way I like to think about the wind turbine business is they're loss leaders. So the same way on Black Friday, I got a PlayStation for very cheap, but the games are expensive. Wind turbines are relatively cheap and they make their money on the servicing side. Now, Vestas had a pretty good service division where it was linked to inflation, but there were a few mechanisms that they needed to enhance, and they're still working on that. But still, a lot of their profitability and that 10% EBIT target is going to be linked to to servicing.
All right, great. Thank you. Mustafa, I want to come back to you because I know that the GE Vernova, like when I look at your primer and when I look at some of your research, you're mostly focused on the gas business, other aspects of their operations, but they're an appreciably large player in the wind space as well. Do you think they regret that right now? Do they have a plan for getting that business, pumping on all cylinders, or is it sort of like an afterthought right now? How does it fit within their portfolio?
I think they definitely regret getting into offshore, the two offshore projects that are still weighing down on the profitability there. But in terms of onshore, I think that company will focus on the US. They sold their Polish blade factory not too long ago this year, I think to Vestas. Alessio can correct me if that's wrong, but I think they will remain in wind. It's just that business won't turn around until probably the end of the decade. They delivered around 8,500 megawatts of capacity 2 years ago. I think that's probably not going to be reached again until 2028, 29. They are trying to sort of bring in efficiency, automation. They made a big deal out of that I think in the 2Q call. Probably we'll hear more about that next week. But yeah, they've had a lot of issues and they had the Nantucket incident and so on. So it's just the offshore has been pretty horrific, but onshore is probably a steady business. As soon as sort of the market adjusts to the lack of subsidies, that could come back in a few years.
Yeah, Omid, I want to get the same question over to you on Siemens Energy. They've got the legacy Siemens Gamesa wind unit, which I think has been a drag on the overall business. What are their plans there? How are they trying to right size it? Kind of give us a sense of what's going on with that segment.
Yeah, it's been the problematic unit. The wind business turnaround is really looking at the offshore strength and utilizing that. Siemens Gamesa is the leader in offshore wind turbine manufacturing and service. And on the onshore side, it's really more of a reset, fixing the onshore product quality, and focusing on the attractive markets. So it's exiting a number of markets that is deeming not as key focus markets for it. So the technical fixes are apparently completed on the onshore side and is starting to take orders. They rebranded this sort of the same turbines, so fresh back to the market to take more orders. But it's really the offshore lead for me that anchors Gamesa's path to profitability. And in terms of the turnaround, is progressing towards fiscal 2026 break-even point and a 3 to 5% margin by 2028, which is this new target. So it seems to be progressing according to plan. There's heavy investment still needed, though, in both execution and transformation, and this means a return on cash position, operations isn't yet in sight, yet to be seen, which for me is really the real turnaround, not just the margin, but the cash position from operations needs to also turn around, given those heavy investments needed. And the offshore execution is ramping on track, with the start of the so-called SG14 turbines now live at 5 plants, and SG14-15 turbines anchoring its 22 gigawatt pipeline. It's on track. So things are looking better, and they need to deliver on that. Onshore is really attempting a service-centric business here. It's targeting 12 priority countries and reducing manufacturing sites to 4 in 2026 from 10 in 2023. Quite a big change. And just to give you some context, service revenue grew 10% plus in fiscal 2025 to 1.8 billion euros, so quite sizable. And there's a 9 billion euros backlog there, about a 12-year duration. So it's really about onshore quality, turbine quality fixes and aftermarket growth underpinning its margin repair. With offshore leadership, which is a 67% share globally, excluding China. China's quite a different market. It's really the cornerstone of its future profitability.
I love the divergence and sort of the outlook on offshore that seems to be emerging here between maybe the US and Europe. So before we move on to a few other topics, let's just circle around on that. Alessio, read the tea leaves for us. Offshore seems to be effectively paused here in the U.S. at least. The current projects under construction, I assume they get completed. But are we going to see offshore really emerge as a sort of new growth driver in this space? And do you think the economics are panning out there?
I think we did have a bit of a pause, and going back to Vestas' orders, they didn't have a single offshore order in Q2 or Q3. We're getting that back now, and I think there's good reason for it. Just this summer, we had an auction in Germany for offshore wind that had 0 bidders. I think that made legislators really take a look and say, okay, is this a technology we want to support? We should need it. It's very strong in the UK. Anytime you take a flight in the UK, you see thousands and thousands of offshore wind turbines, and that means they probably do work, right? We're also talking about turbine pricing, and a big thing that lifts up turbine pricing is the higher pricing offshore turbines. So I do think it will be a focus in the coming years. It's a later in the decade thing, and right now we're more focused in the era of onshore wind.
Okay, great. Let's circle back around onto some of the other sort of general themes that I think might be hitting these companies. We kind of started off on this idea that AI is this new driver of power demand, particularly in the United States. But I think there's just a lot of things happening just generally on the electrification front. And I'm curious if you can frame the other aspects of that story. For instance, I think there's a transformer shortage effectively in place right now. So, how is and we'll come to you first, Mustafa, but just give us a sense of, how is the overall grid business playing into what GE Vernova and some of the other industrial players are doing right now from your perspective?
Sure. So, grid equipment and especially transformers are in great demand, as you suggested, Rob. Basically, to give some framework, during the supply chain shortages of post-COVID, you were looking at a 2-year wait for a transformer from the likes of Eaton, let's say, or GE Vernova. Now that wait has slightly come down, but it's still not back to the levels pre-COVID. And for GE specifically, I think this is an excellent business because their grid business is primarily a legacy Alstom acquisition, which they did back in, I want to say 2012 or 2013. It is primarily a European business, so they're sort of a late entrant, let's call it, in the US. So they have a lot of market share to gain, and it's been doing really, really well. They also have a stronghold in the Middle East. So as they sell gas turbines in the Kingdom of Saudi, they also sell some grid equipment alongside that. So the orders have been running well ahead of sales in that business for GE Vernova. And also, as a final point, we sort of look at this gas turbine market as a duopoly or oligopoly. If you include Mitsubishi Heavy, the grid business on the high voltage side is very similar. The high voltage direct current lines that run from country to country or in the US between the states, those are also dominated by GE Vernova, Siemens Energy. So I mean that's the grid business is relatively small at the moment, but I think it will be one of the key highlights of GE Vernova's investor event next week.
Yeah, Omid, let's get your reaction as well. How does the grids pay into your thinking?
So I mean, we on the power transformer side, like you mentioned, there is a shortage. The gap today between supply and demand is about 40%, and even there's a lot of investment on the way, including Asian players expanding into this attractive market. By the way, we still think what we're hearing is that there could still remain a gap of 10% by 2030. Now, in terms of the lead times, there's currently a 5-year lead time for power transformers, and that compares to a 2 years average, sort of longer term. So it's clearly above long-term averages, and it's driving further investments, 2 billion euros worth from Siemens Energy into expanding production capacity there with a flexible ramp-up plan that it's announced 2 weeks ago, and that's after already expanded capacity by 20%, spent 600 million euros on this. It's a milestone that is already achieved and is going beyond that now. So that just shows you just how strong the demand is. And when we put a question to Siemens Energy Management, so what about the Asians expanding into this space? Could that close that gap, and remove that sort of opportunity for you? Because you are investing quite a bit, following quite large amounts already invested or spent. They don't see the Asian entrance as closing the gap there.
Very interesting. I find it fascinating that we're in the midst of a transformer shortage. This is a piece of technology that we've known how to make for a century or something like that. And the idea that we suddenly find ourselves in the midst of a sort of a supply chain crunch is quite interesting. Here's a provocative question I want to ask both of you. Solar is growing incredibly fast. And there's a bifurcated market. If you're a Chinese solar supplier, been a tough couple of years. If you're a U.S. solar supplier, it's been a great couple of years. But I think solar is kind of notably absent from both the GE Vernova and Siemens Energy story. So I know you don't give advice to the management teams there, but Omen, what do you make of that? Do you think they're missing a trick by not being more active in solar? We'll come to you first on Siemens.
Yeah, I think that's a symptom of how the business models and the strategy evolves. So just to give some historical context from Siemens Energy perspective, it wasn't long ago that the gas business was actually going down. It was a structural decline story, cash cowing the service business, what was remain of the installed base, and that was it. So, as Siemens Energy Management was looking at ways to diversify and find new profit opportunities, and renewables was one of those. And amongst the, the options within the renewables market, within its core region, Europe, wind, and, especially offshore wind was quite an attractive one. So it did make that investment into Gamesa back in the day, which with hindsight maybe wasn't the right decision, given what we know now. But at the time, it was a strategically sound decision to be made. Renewables was up, gas was down, and that was the move that they made. Now, solar wasn't really on the radar. I think they saw the wind market as being the really the attractive market there, given the the capacity of generation that it can allow, and given how what Europe has to offer on that front, given its the wind natural asset that it has that it can benefit from. And also the the incentive programs within within European countries that drove that demand at the time. So that's really the historical context here for Siemens Energy and how it got involved with Siemens Gamesa. And then following that sort of investment that it made in Gamesa, when problems started to surface around with some of these turbines and installations, then he had to then he decided to get involved and help fix it by taking increasing his stake there. So that's how that came about. I think having known how demand for gas and grid could have picked up the way it has, I think they would have stayed away from renewables altogether.
Very interesting. Mustafa, what do you think? GE Vernova and solar. Same question for you.
I mean, there's Nova in the name, so there's maybe a chance they do get into panels, but I mean, that is, as you know, the margins are, I guess, not great, especially compared to the other two main big businesses. But GE Vernova does have about $500 million of revenue, mainly from inverters for solar and related storage. So they are sort of in this business a little bit. It's just it doesn't move the needle given the size of the rest of the business. I think they made a mistake, frankly, because I'm not an expert on renewables, but when I take a step back, especially with offshore wind, right, there are so many sort of geographically feasible places. The water needs to be sort of shallow enough, close enough to the shore, and so on. So you have the North Sea, yes. You have maybe the coast of northeast US, but it's sort of limited in terms of geographical availability. You have Maine, obviously, for onshore, but solar is this vast area where you can deploy solar generation. And Texas is emerging as one of the main hubs for data centers, and they're using a lot of solar and storage. So I sort of half expect them to get more into solar, but on the edges. So they have a software business, the inverter business. Maybe they invest more in those sort of adjacent areas.
Yeah, so maybe I don't think we have time to sort of like work through all the queue here on questions, but the one that just came in, I was going to already ask this about sort of the battery storage side of it. And if you look at the battery storage numbers coming out of California and Texas, I mean it's an emergent trend. If I were to sort of identify one of the things that's just going to continue to really have an impact on power markets in 2026, 2027, it seems like the day of battery storage has arrived. I generally think of battery storage as probably having a negative impact on not the big CCGTs, but maybe the peaker gas plants. If you're in that business, you might want to be a little bit more worried about what's happening on the battery front. But let's get your read. What is battery storage maybe something that you're going to see more of from GE Vernova?
Yeah, maybe they don't become a direct competitors to Fluence, but I think, as I mentioned, more sort of inverter converter type of products, they will probably expand in those. areas. And the electrification is the segment where they're making the investments, right? So they bought their minority stake that they didn't own in the Prolec JV. That's mainly for transformers, but it has other stuff in it as well. So I think that will be the way they go. And if you do believe that sort of the middle ground, the peakers, the reciprocal gas turbines are most at risk, then GE is relatively insulated because, as I mentioned before, they focus on the heavies and they have the aeroderivatives. So
Okay, Omid, same question over for you. What do you make on the emergence of battery storage as a phenomena? How could that affect a company like Siemens?
I think it's a great market. One of the companies we cover, Wärtsilä, is active in that area. Siemens Energy is not a battery manufacturer. They do not make utility scale batteries, lithium ion packs or long duration storage systems, which is a key distinction versus companies like Fluence, Tesla, or even Wärtsilä. But they do play in the parts of the storage value chain, especially in the grid connected power electronics. The integration side of it and the stabilization act. So the exposure is really through the grid technologies business and the transformation of industry division with two angles, really. One around the grid stabilization systems that it provides, supercapacitors, eStatCom, for example. And secondly, the hybrid grid connected solutions, things like battery energy storage systems, supplied by, where it really integrates the battery energy storage systems that are supplied by external vendors. So that's really the role it plays, and I think it's quite happy continuing playing that role.
Fantastic. Alessio, I want to get your perspective on batteries as well. A number of companies in the sort of more pure play solar space have been jumping in on the battery game. I know Nextracker, now Nextpower, is talking about batteries. What about a company like First Solar? Are they going to jump in on the battery game?
Yeah, so Nextpower, as you said, formerly known as Nextracker, is moving into this like more vertical integration model. So first they were just doing the trackers, and then they're doing the electrical balance of systems, bit of inverter stuff. They're slowly moving into batteries. I think that could be the future for these big guys. Like, what's the next trick they could pull out of their sleeves? Vestas comes to mind. They just announced their 6th US factory. They've got multi-year backlog. What's next for them? Batteries maybe won't increase margins, but like solar margins for First Solar are already 30-something% versus the 10% we're talking about for wind. It could be a very good EPS story for them to add a battery system to their offering. And it'd be nice synergies, Nextracker and First Solar. And then it's worth noting that like Canadian Solar has been doing batteries hand over fist. They've already got this vertically integrated model, and they're even reshoring some of their production from the Chinese JV to the US one, just to make sure that they fall within the FEOC guidelines.
Okay, fantastic. We have gone almost 20 minutes over, so I think this is probably a good stopping point. And I want to note that most of you have stuck with us. So thank you for taking so much of your time to sit here and listen to us chat about the companies and topics that we're all pretty passionate about. I will note that all of us are green dots on the terminal right now. We love to talk to you. So if we didn't get to your question, or if you have follow-ups, please either ping myself, ping Omid, ping Mustafa, ping Alessio. We are more than happy to follow up with you. If you haven't read our primers, if you type GEV US equity, the ticker for GE Vernova, and then you type BICO, that'll load the company outlook that Mustafa has written. Same thing for Siemens Energy, same thing for Vestas, First Solar, are on down the line. We have over 2,000 primers on companies that are live and active, and encourage you to take a look at those, read what we think about the company, and then if you either disagree, agree, have a different view, have a question about something we didn't cover, just ping us. We are more than happy to engage with you as you're thinking about the names in this space. So we look forward to hearing from you. And next week we will have same call, same time. We'll be on at 10 a.m. New York next Wednesday, and we'll be hosting some of the crew from the core BI Energy team. So thank you, everyone, and we look forward to talking to you next week. Take care. Cheers.